Good morning, Mark Soderberg with ADM Investor Services with a quick summary of today's USDA production, WASDE, and stocks data. Very bullish numbers here for both corn and soybeans. Corn right now is trading about 15 cents higher, carving out new 7-month highs. Bean prices up 30 cents now to their highest levels in about 2 months. Data today from wheat was mostly neutral, perhaps even a little bit bearish. However, with the higher trade here elsewhere, we're trading higher in wheat complex as well, up about 4 to 6 cents. So let's just dive right into these numbers. Corn production was cut by 276 million bushels to 14,867,000,000. That was roughly 140, 150 below the average trade guess. The average yield did drop from 183.1 last month or in November to 179.3. Harvested acres are actually up a little bit. Ending stocks did fall to 1.54 billion bushels, largely in sympathy with the lower production. Actual usage was cut about 75 million bushels, down 50 in the feed, down 25 in the exports. And the average farm price was increased 15 cents a bushel to 4.25. D1 stocks came out at 12.074 billion, below expectations, but given the sharp reduction in production, it did not suggest stronger than expected usage, actually, with the lower feed numbers. In the soybeans, we did see production there was cut 95 million bushels to 4.366 billion. The average yield trimmed to 50.7, down a full bushel an acre from November. The average or the harvested acreage figure was down 200,000 acres. Ending stocks in soybeans fell all the way to 380 million bushels. That was below the range of guesses. Usage was left unchanged. Imports were raised 5 million bushels, and the average farm price was also left unchanged. A bit of a head scratcher there, holding at $10.20. On the products, we did see bean oil exports jumped, increased another 500 million pounds to 1.6 billion. We did see a 400 million pound drop in domestic usage, that for the production of biofuels. 1.6 billion was just a couple months ago. Exports were only 600 million. So obviously the sharp discount to Malaysian palm oil has made bean oil much more attractive in the global marketplace. Stocks as of December 1st at 3.1 billion were about 130 below the average trade guess. Not much change here in wheat. D1 stocks, 1.57 billion bushels, well above 150 above a year ago, but in line with expectations. The ending stocks on wheat, they were very little changed, holding just under 800 million bushels. And on the acres were actually up 700,000 acres from a year ago to 34.1 million. We were looking for about a 700,000 acre drop, and it came in at the very high end of expectations. Pretty well distributed. I guess the biggest increase proportionately came from the soft red. World stocks all below expectations in corn and in beans, largely due to the lower stocks here in the U.S. USDA did not make any changes today to the South American corn or soybean forecast, opting to kick that can down the road a little bit, see how this hot, dry pattern currently in central Argentina, how that plays out here over the next month or so. And they did lower the amount of Chinese corn imports, 1 million metric tons to 13 million metric tons. No significant changes to China in the bean complex. In wheat, we did see the USDA lower the Russian wheat export forecast by 1 million metric tons to 46. So higher here across the board, fueled by today's USDA data and watching weather in South America moving forward. Thanks for listening, everyone. Have a great day.